we invent. You don't want to raise tax. If I wanted to indulge in financial suppression, I would want to do it in a way that made it seem like you were selling dreams. It's basically a lottery.
But you're stuffing it back into 401ks and IRAs through the ETFs that follow.
Generally, create something, give it far more value than it's worth, and then have people speculate. Maybe it does get to 4 trillion, but the big, huge money, the multiple 10xers, 30x, 40x, 100x.
They're made, yeah.
That's made. Ponzi as financial suppression. So what do I mean by that? If I was facing a wall of short-term paper that needed to be rolled over, I'd be interested in juicing tax receipts. And so let's just imagine we invent a company and tell the world it's worth 2 trillion. I'm speaking in extremes to make the point, sort of a classic lateral thinking tactic, like let's just go to infinity. So we're just going to tell everybody this company's worth 2 trillion. And there's a whole bunch of well-heeled VC investors in it, special purpose vehicles in it, and they're all in it at vanishingly small tax bases. So that which was marked at 100 billion a year ago, 200 billion a year ago, we're just going to say it's worth 2 trillion. Now, as the IPO rolls out and the insiders start selling, well, every transition of a share from an insider to a 401k or a retail investor or a global investor creates a taxable event, capital gain. Let's just say, for round numbers, that the increase in tax receipts from this IPO this year will be 300 billion. It's not that crazy. 1 trillion rolls over. If you're sitting on $50 million of SpaceX stock and you invested, I don't know, $1 million many years ago, what are you doing? You're selling. You're going to buy me some treasuries, right? And you're going to pay taxes along the way. And so, okay, one IPO is 15% of the bogey. Now we have OpenAI coming. We have Anthropic coming. So if you just create paper gains and force retirees and convince retails to buy it at ridiculously high prices, all the people doing the selling are going to be sharing that with Uncle Sam.
Yeah.
That was sort of our aha moment this weekend as we gave this a deep think, which is maybe it's not as bad. So when we were talking earlier, there's no way around it. Well, there is a way around it, which is to trick people that something's worth 10 trillion, have 3 trillion of it come in the form of receivables, and we wipe out some of that debt, and also stablecoin issuance and all the other things that we're seeing as sort of a soft form of financial suppression. There's this part of the story where you just go and take it from people's 401k accounts, that's one way, but the other way is you indirectly take it by dropping bags on them, to speak bluntly. And it's probably a little tinfoil, a little woo-woo, a little out there, but it kind of makes sense.
If SpaceX immediately is included in the ND, the NDX 100,
yeah,
and there's plenty of shares that would have to be bought there. I don't know with the exact calculation, or if you've done it. I think it's a lot of shares. It doesn't
even matter because it's all, with every unlock, you're creating new taxable events for people dumping. Like it's up today, the $25.
But you're stuffing it back into 401ks and IRAs through the ETFs that follow the NASDAQ 100 or the S&P eventually when they do get a profit.
Forget SpaceX. Let's just take that as a hypothetical and broaden it. If I wanted to indulge in financial suppression, I would want to do it in a way that made it seem like you were selling dreams. It's basically a lottery. This is essentially lottery taken to an extreme level, right? And so there is a path where you make a bunch of people rich, you close the deficit, and the is spread over a much wider unsuspecting audience, which is a classic definition of financial suppression. So there's things going on, that are hard to explain. Like, gee, how could, like, for example, like SpaceX up $25 today. What's that? 300 trillion in market cap in a day? Just goes to show you how wild the stock market is, right? Like that a company that does a couple of deca-billion dollars in revenue is swinging in value of 300 billion based on, what everyone agrees are unrealistic sci-fi type, musings of a relatively odd man. And so what's going on? There's a deeper meaning, that's our long shot view. Yeah.
Sorry, that was stupid. I just had to jump in there because that was part of this whole thing that was driving me a little bit crazy with the initial launch. Like, I'm not saying that Elon's not great and we're not getting cool stuff out of this. And man, the comments, if you start to question it a little bit, they were really coming at me pretty hard for not understanding. But I was looking at SpaceX, and in terms of, from what I could find, that the Starlink is actually profitable and bringing in about 11+ billion per year. But the space side of it and the AI side of it are both losing money. And I think you're only like 18 point something billion there in total. So I'm like, it's great, but going back to even the initial question that we kicked off the conversation with, it seems like it feels very, this is terrible, it feels very ICO. It feels very like NFTs in a way that, like, we have this grand vision for where this is going and we're basing the valuation on that, but it's pure hype and narrative. Like, there actually isn't the product's not to market yet.
In our mental model, none of that matters. All that matters is people have to believe it. And so, like, save all the comments. Not that anyone's going to get this deep into the podcast if they're looking to rag on you in the comments. But like, all you need is literally enough people to believe, right? Because the point of the exercise, the purpose of a system, what it does is it creates an enormous amount of tax receipts with very low friction. Who's complaining?
Right, and that's a good point. I mean, even if you get to, Goldman has almost $500 billion estimated revenue by 2030, I think. And so, I mean, 25 times growth between now and then, or whatever it is. And, I mean, so
lead underwriter, we should say.
Let's just pretend that they hit on all cylinders and they hit that you still need to believe. I think it's like 8 times revenue for you to get a double from here. You still need that. So you've got it, like, this is priced to utter perfection, right? And then now when you say that, though, Doomberg, it brings up the thought again. Now you have another little thought process, and you look at Polymarket and Kalshi, and you think about, well, there's so much money in betting now. People spend more money on betting than they have on music, movies, and books this year, which is just insane. And you think about that, but every single time one of those bets is settled, that's a taxable event. And you have to put your ID on there. You have to be, it's a KYC on those apps. I know, because I got onto Polymarket, and I can't even, not that I bet in the Polymarket market. I got enough going on, but just to see how they work, I know that you can't bet here in Nevada on sports or politics, because you're blocked out from the casino, however they politicked that. But you have a settlement on every single one of these trades. If you bought the Knicks and you won, that's settled. That's a taxable event. And so it's not like these where you buy SpaceX, you sit on it for 5 years. Yeah, you've got a taxable gain, but there's no way to sit on a taxable event there. There's no way to sit on a taxable event unless you've got a very long contract that you're betting in. So there's no
parlays, no long-term parlays.
That's right. There's no long-term parlays.
So this is now you're starting to think like Doomberg, James. So if you have a giant hole and you need to plug it, right, and you don't want to raise taxes on people, you do things like this. You make, nihilism is a great way to have people part with their money. So in that world, I want to own things like Bitcoin and gold.
Yeah, it's financial repression, and it either way, even if you do wear the tinfoil hat and you believe that, which it's not really that far of a putt, but let's just say that you believe that there are ways that we're creating large taxable gains that really, what do they do? Well, they end up exacerbating the K-shaped economy. They end up exacerbating that separation of wealth. It's just what it is. And so all paths, again, do lead to some sort of debasement and printing and or that financial repression and exacerbation of separation of wealth.
So you just said something I want to emphasize, because this is actually sometimes why we're often or sometimes misunderstood. When we use the word mental model, and we exercise in lateral thinking, the most important skill of lateral thinking is not concerning yourself as to whether or not the axiom is correct or not, just whether it works. So axiom is that Ponzi suppression. And again, I'm not calling SpaceX a Ponzi. I'm using that phrase more generally. Create something, give it far more value than it's worth, and then have people speculate on it and collect the taxes. That's what we mean by that label. It doesn't actually have to be true as long as it continues to predict. So in that mental model where all bets are off, you can gamble, you can do things, you can speculate, you can make exaggerated claims as a CEO about what you're going to do. You're not going to face the consequences. The SEC is going to be defanged. All those things are consistent with the need to generate nihilistic type capital gains to tax. And so whether or not we're right is irrelevant. Is the model currently operative? And in our view, we'll see how OpenAI does. We'll see how Anthropic does. One counter to that, for example, was S&P not including SpaceX in shortly after the IPO. That ran counter to our mental model. And so, okay, that's a cut against it. If we get a few more cut against it, we just discard it. And so thinking in that way is what leads us to make the occasional long shot prediction, but it also means we're not afraid to be wrong and we just move on when we are.
I want to just double tap on that for a second too, because that really hit me, this idea of lottery and like how profitable lotteries are for state tax revenue. I just looked it up quickly here. The U.S. State lotteries bring in $30 billion in tax revenue. If you need more tax receipts coming in, it's a very nefarious and, you're right, kind of nihilistic, and I don't know, there's something very dark about we're going to get people to gamble and speculate their money back into the U.S. coffers there to pull it in tax receipts. James, I want to quickly touch on, and I do want to make sure we get to energy and Doomberg, your outlook on energy markets as well, but I want to quickly touch on the K-shaped economy. Since the last time we spoke, is it still kind of going ahead full steam, or are we seeing any further breakdown on either of those K-shaped legs?
No, I think it's going full steam. That what you're seeing is the continued the lower demographic is taking on more and more credit card debt in particular, and they are now defaulting at a rate that's rivaling the 2008 Great Financial Crisis.
Whoa.
And so the lower demographic is struggling, and I know it because I can see it from some friends and friends of friends who are just they're just wage earners just trying to get by, and it's been a difficult period for them to keep up with the inflation. Why is that? It's not just that their wages, the wages supposedly are keeping up according to economists, but they lag so severely. Number one, and number two, they're keeping up with maybe CPI measures that are faulty, and in real life, you can't buy insurance at the rate that we talked about this last time. Car insurance, health insurance, any house insurance. You can't buy that insurance at a rate that according to CPI. So just those are big things. Daycare costs, so you can have a dual income family. So anyways, but we're seeing that the New York Fed just put out their latest quarter. Remember, this is severely lagging too. These numbers are so lagging. You can see that the economy, the consumer is not doing great on average if you just slice it down the middle. on the face of it, you go to restaurants, they're full. You go to try to buy a Knicks ticket. They were what? How much were they in the $10,000 for a ticket to go to a basketball game? Like something insane. So, but by and large, when you go to these restaurants, you're not seeing young kids in there. You're not seeing kids with young families in there. You're seeing boomers. You're seeing older people. You're seeing people who have assets they're drawing from, who have made out in this economy. I'm not blaming these people that benefited from the system that they bought into. Gen X, I think Doomberg, you're Gen X too. We were sold this system that says you go find a company, work for the company, work for them for 20, 30, 40, 50 years. You're going to have a pension, a 401k, you'll leave and you'll retire. You'll have a great life at 65 and on. You'll be taken care of. Well, that completely collapsed in our generation. And unfortunately, some of us made out okay on the way along, but millennials got utterly destroyed in this whole machine. They got ground in and said, you go to college, you take out the debt, you get a job, you stay with the company, you make sure you're loyal, and they'll take care of you. And lo and behold, pensions got scrapped. 401ks are there. Some of them, a lot of them are off the table. And so you're standing there and you have to switch jobs 4, 5, 6 times just to keep up. And now your wife is working, you've got daycare. So that's a long way of saying that, no, I don't. I think that the lower demographic is struggling more today than the last time we talked.
So let's take SpaceX. I saw numbers. Who knows what the numbers are? 10,000 paper millionaires. Let's pick the number, right? Early employees. Look, I saw in the private world offerings for SpaceX maybe a half a dozen times in my career, in our private life. Hey, I'm a friend of Elon and I've got this SPV and I'm going to do a 2 and 20 and, I'm going to get you into SpaceX at, $30 a share. Now it's at, 190 today, whatever. There's a whole pyramid, pun intended, of very well-off, by definition, to have participated in SpaceX prior to the IPO and to have not been an employee required you to be a sophisticated investor. What's the phrase?
An accredited investor.
Accredited investor. Yeah. And so
and have the contacts to get to.
Sure. Yeah. And so you've taken all of these accredited investors who are by definition worth more than $1 million and on the right side of the K that James was talking about. And now there's 10,000 of them that just collected 7-figure checks, some of them 8 and some of them 9-figure checks. And they're paying taxes on that, back to the point earlier. So that is the people getting in now, like James said, right? If you're buying it now at 2.2 trillion valuation or whatever it is today, I mean, maybe it does get to 4 trillion, but the big, huge money, the multiple 10xers, 30x, 40x, 100x,
they're made.
That's made, and that's not made by Joe Sixpack. I mean, I'm sorry. I'm only laughing because it's so cynical to pretend otherwise.
That's right, and that just exacerbates it too.
Right.
And so, here's the report from the Fed right here. You can see it, that these delinquencies on student loans. Of course, nobody's paying their student loan. They're delinquent on those. And then here's your credit cards, and there's a 90-day delinquency on credit cards. Who's on credit cards? Like, Doomberg, you use a credit card because you want points. You pay it off every month, like I do.
Are you spying on me or something?
So I mean, that's what you do. You get the points, but you pay it off. These are not being paid off. And
James, I have a confession.
Yeah, please.
I'm a points millionaire.
Yeah. See, I think I'm a points billionaire. No, I'm just joking. So, which is the points are worth nothing now. They just keep, and you can see the amount of debt that's just up and to the right here. So, it's a problem and it's not getting better. And that's an interesting take on that, though. But like you said, and that's the Cantillon effect that we talked about. Is that the Cantillon effect is if you're he who is closest to the money spigot is the one who makes out the best. And how do you get close to the money spigot? Well, you can become a congressman, or a senator. You can be close to Fed officials. You could know people and be very close to banks. Who are those people? hedge funds, investors, large investors, high net worth investors. And how are they close to the money spigot? Well, it's kind of like what Doomberg just said, is that you get the call on SpaceX on day one that, hey, we're going to raise a first round, a seed round, a friends and family round, and you're going to be included on this. And lo and behold, a year, 2 years, 3 years, 4 years later, your $1 million becomes 500 million. It's like, well done.